What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Wynn Resorts, ticker symbol WYNN, trading for $72.71 as of July 26, 2020, equating to a market cap of $7.9 billion. It's been a crazy ride for Wynn investors as the company is up over 70% from its lows seen March 18th, 2020. However, this still represents a massive decrease of 44% from its highs seen a year ago today. So what's the move? Are we going all in on Wynn? Or taking our bets off the table? This is your quick stock analysis. Just so that everyone is on the same page, when you boil it down, investors in Wynn are getting exposure into 4 segments, which include the first 2 being a luxury hotel and casinos, including the Wynn Resorts Las Vegas, consisting of the Encore and Wynn. They also have the newly built Encore Boston Harbor in Boston, Massachusetts, Wynn Macau and Wynn Palace, obviously in Macau. The third and fourth segments, which in all honesty are more of a complement to the first 2 segments, being food, beverage, and entertainment. However, as you can see, making up 75% of the company's revenue is its gambling segment that dwarfs the other segments. Now that we are on the same page, let's break it down, starting with the company's most profitable segment. If you would, let me throw down some quick stock philosophy. Gambling is profitable because humans are irrational creatures who operate on impulse and the desire for that sweet, sweet instant dopamine, which many humans seek out through gambling. And honestly, our culture has been hooked on that instant gratification, and the idea of get-rich-quick schemes are as old as man. However, what's less certain is the form gambling may appear, as one could certainly make the argument that a decade from now, the idea of sitting down at a Flintstone slot machine to click a button that is only required by law to pay out 75% of the money that goes into them, well, that's less clear. Leading us into our first bear case for Wynn. Online gambling. Let's be real, it makes it much easier for people looking for that dopamine fix. Y'all can play cards, make some bets on anything you can imagine from the convenience of your smartphone. And online gambling restrictions have been lightened due to quarantine restrictions, while at the same time people have become less optimistic about going to a physical casino. Before the pandemic, the global online gambling market was anticipated to double in the next 4 years. However, as the pandemic has caused online gambling restrictions to loosen and vastly increase the market, I wouldn't be surprised to see a 2x in that same period. Which, shameless plug, we will be covering some of these opportunities in future quick stock videos. But back to the point, it also cuts out the middleman. Y'all don't need to drive or fly to a physical casino resort. After travel, food, entertainment, it could very well cost anywhere from a few bucks to a few grand before putting any money into the casino. And don't get us started on the cost to build the casino. Simply put, the higher overhead means lower payouts when compared to online gambling, who after all has very little overhead. But pump the brakes! Now that we've racked up some dislikes, if I'm being honest, I don't think that paints a complete picture. Yes, casinos are no longer going to be the gatekeepers of the gambling market, and it's going to take some time to transition. They are definitely going to drag their feet. However, gambling as we know it isn't going to just disappear, as there is something to be said about the experience of in-person gambling. And for a lot of people, gambling is just part of the experience. And for that reason, I don't think Wynn is going to have a problem getting people into its doors for decades to come. As, like we said earlier, all of its business segments link together. They have amazing clubs. Before the quarantine, you could go to Wynn Las Vegas on almost any day of the week and catch DJs such as the Chainsmokers, Diplo, Alesso, Kygo, Dylan Francis, even Elon Musk's girlfriend, Grimes, Major Lazer, etc. Not your thing? How about multiple 5-star restaurants on the casino floor? Or how about once-in-a-lifetime Cirque shows? While you're at it, you'll put some cash on the roulette table and buy a $44 double vodka Red Bull and have to tip the bathroom attendant for drying your hands. But I'll be real, Wynn needs the cash more than you, as the company's first quarter of 2020 was awful, with a 43% decrease in operating income, which represents a $700 million loss in revenue. And just to really put this into perspective, the company's net income for all of 2019 was $279 million, meaning the company lost $400 million more than they made in all of 2019. So we can't overemphasize how much the pandemic restrictions have and will continue to affect the company. And of course, we're not only talking about in Las Vegas, but more so in Macau, as gambling in Macau is 7 times larger than Vegas. This really does represent an absolutely huge Chinese market, which in good times is great. And gambling has become very ingrained in certain Chinese cultures, especially in Macau, as it's the only place in China where it's legal to gamble. However, we gotta take into consideration that gambling in Macau has plunged, which is terrible for Wynn, as the company generates approximately 3/4 of its adjusted earnings before interest, tax, depreciation from Macau. Let's be real, the Chinese economy has not only taken a hit as US-China tensions escalate and massive deceleration in the country's GDP as quarantine restrictions have crippled all regions across the globe, but also consider that Wynn Resorts is an American company who could find itself in between the two countries' jabs back and forth. However, we should note, historically the company has had strong ties to the Chinese culture, and one could certainly argue this still represents a huge catalyst for the company, especially as Macau has started easing quarantine restrictions. Moving on, we should quickly note historically Wynn has had a great dividend. However, take into consideration that many casinos have cut their dividend and share buyback program. But so far, it looks like Wynn has been able to hold on. As of March 6th, the company paid a dividend of $4 per share, making a dividend yield of 5.25%, or about 153% of the company's earnings. Yup, that seems sustainable. But if the company can play its cards right, that certainly represents a huge catalyst for investors. However, it seems reasonable to argue a dividend cut is imminent. Before looking at the company's balance sheet, back in Las Vegas, the new luxury hotel casino Resort World will be built down the road from the Wynn and Encore establishments, which is expected to be a $4.3 billion Asian-themed marvel, which is going to be in direct competition with the Wynn. Anyways, let's get into the company's balance sheet. Good news for the company is its short-term debt is non-existent. However, with over $11 billion in long-term debt, which remember, currently the company's total market cap is under $8 billion, which is certainly something to keep in mind as the company bleeds cash. The company has only had free cash flow 9 out of the last 15 years. I suppose it really is easy come, easy go in the gambling world. However, I should note, some of its competitors on the strip, such as MGM and Las Vegas Sands, have a much better free cash flow. So with all of this in mind, what's our move? If I'm going to be honest, if the world can get back to a state of normalcy, and Macau and the Las Vegas Strip can start to offer massive events, people will go, and as a result, Wynn Resorts will see a share of that market, and clearly Wynn has plenty of room to run. But for our long-term quick stock portfolio, we have no interest in building out a position in Wynn. But it certainly is an interesting prospect that the company's market cap is under $8 billion, and yet its total assets as of March 31st, 2020 was $14.2 billion. It's just that, quite frankly, I think we can get better returns with a lot less risk in other investments. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 880 subscribers and plan an early retirement. I will catch you guys in the next one.